Okay, so in this video we'll be talking about an investment strategy called dividend investing. As part of this series where I talk about different investment strategies, we'll also cover off growth investing, value investing, index fund investing, and also even cover off some day trading investing strategies as well. But they will be separate videos, but they'll be coming down the line, so stay tuned for that. Also, make sure you do stick around to the end of this video where I will reveal 2 dividend paying stocks that I'm a big fan of. So before we start, guys, if you can take a quick second to drop a like on this video, it really does help out the channel. So first of all, what is a dividend? A dividend is essentially a payment that companies make to their shareholders out of the profits that they've earned. An important thing to note is that not all companies pay dividends, so if you are going for a dividend focused strategy, it's best to do some research into it just to ensure that you are picking up dividend paying stocks. So a way for us to research about these companies and see if they pay a dividend is to use a website called dividend.com. I'll leave it linked down in the description below. So I've pulled it up on my phone here, so we'll just go through an example. We're going to use Microsoft for this example. So what we'll do is just put in the ticker for Microsoft, which is MSFT, and we can go ahead and click onto that, and then we'll see if this company pays a dividend. Now, of course, I know that I have picked a dividend stock here to show you as an example, but if we just scroll down here, we'll see kind of the details about the company and the dividend that it pays. And if you were to search a company on dividend.com and it came up here with no information, that would mean that they do not pay a dividend. But if we go down to the dividend data tab here, we can see some of the details, the important details here. So we can see that Microsoft have a dividend yield of 0.88%. And we can also see that the dividend that they pay out on an annual basis is $2.09. A good way of thinking about the yields is essentially if you invest $100 into Microsoft, for example, you would get 88 cents in a dividend payment. So as I mentioned, that $2.09 was the total payment for the last 12 months, and it was paid out on a quarterly basis, and we can see that there in the dividend frequency section. So that means if you owned 1 share of Microsoft each quarter last year, you would have got about 52 cents. Obviously, when we're looking at such a small example like that, just owning 1 share of a company and you're only getting 52 cents per quarter, it does seem like it mightn't be worth it. But when we bring this up to a bigger scale, which we'll show examples of in a little bit, you'll see how dividend investing can be a really good strategy. Another really important metric here is the consecutive years that the company has paid a dividend. You can see here that Microsoft have paid it for the last 11 years, which is a pretty good standard there. But there are some companies that they call the dividend aristocrats, which have been paying dividends for the last 60 years plus, and I'll show an example of one of them at the end of the video. An important thing to note here is that a company can reduce or cut their dividends at any time. So while on dividend.com you can get a guideline of what the company have declared, this does not mean that it is guaranteed for the future. Now, do keep in mind, this is generally not in the company's best interest to cut their dividends. This would only be if they're under significant financial trouble, which we have seen in the course of 2020 with the illness going around. In the event that a company did reduce or cut their dividend, it would not be in their best interest, as it would likely drive a lot of money out of the stock and into different stocks. So I just want to highlight here that it is possible for companies to cut these dividends, so it is not essentially a guaranteed income for the future. But that again is where the consecutive years of dividend payments is a good metric. If you find a company that has a really good history of consecutive dividend payments, like I said I will show at the end of this video, it's generally a good indication that you can expect to see this dividend keep coming in for the future years. If they survive things like the financial crash and other market dips along the way, it's generally a good indication that they will continue to do so for the future. Now, there are 3 important dates to know when it comes to dividend stocks, so let's go ahead and go through them. The first one is the declaration date, and this is when the company declares what dividend they will pay for the coming year. The next date is the X date or the X dividend date, and this date is on a trading day, after which you will not be eligible for the dividend for that quarter. The next date is the record date, and this is when all of the shareholders eligible for the dividend will be recorded. And finally, we have the payment date, which is when the dividend is actually paid. Okay, so let's take an example of that. So let's say the X dividend date for a stock is the 1st of March, and let's say you buy into that stock sometime in February, you will be eligible for that dividend. Now, if you buy the stock on the 1st of March, even if the payment isn't until the end of March, you will not be eligible for that payment as you've missed the X dividend date. You can find the X dividend dates on dividend.com or just simply searching your stock and then X dividend date. Okay, so now that we've established what a dividend is and a way that we can research if a company pays a dividend, we need to figure out how we can execute a successful dividend strategy. The aim of a dividend investment strategy is that for you to have a certain amount of money invested that will allow you to receive dividends that will be able to supplement your income or your pension if you are retired. The amount that you'll need invested and the amount that you will get in dividend payments will obviously depend on your situation and how much you plan to spend, either in retirement or whenever you want to start using these dividend payments to fund your lifestyle. Let's take an example here to better understand it. So let's say we have 500,000 invested in some stocks that pay an average dividend yield of 2.5%. In this example, we would receive $12,500 in dividend income each year, and that would equate to about $1,000 in dividend income each month. So that's a rough example, but of course you can find stocks which have higher dividend yields and some which have lower dividend yields, but 2.5% is roughly the average dividend yield. Now, while a dividend stock is generally not considered a growth stock in terms of you wouldn't expect to see the share price 10x in the space of the next few years, there is a decent chance that whatever money you invest into these dividend paying companies, that it will grow at a consistent rate, but obviously it will depend on which stocks you choose. Unfortunately, it's not as simple as just finding the stock with the highest dividend yield and putting all your money into that. The same rules of being diversified that apply to any stock market investing should also be applied within the strategy. For example, a lot of oil companies have quite a high dividend yield, but it may not be something you want to invest a lot of your money in, because with the whole green renewable energy wave that is coming, these stocks may be at risk of at the very least some volatility, and some of them may even go bankrupt, so you don't want to risk your initial investment here. Instead, an idea here would be to invest your funds into dividend-paying stocks, spread across a couple of different market sectors, and reduce that risk as much as possible while trying to maximize your dividend yield where possible as well. One method to do this would be potentially by just investing in the S&P 500, finding a fund that tracks that. The S&P 500 pays an average dividend yield of 2.5%, so that could save you a lot of work. As I mentioned previously, you can find stocks with a higher dividend yield than this, but you have to remember you need to stay diversified here as well. So if you don't want to put too much work into researching the different dividend stocks you should have in your portfolio, the S&P 500 is a possible solution to it there. Generally, people would reinvest their dividends as they go along to take advantage of compound interest, and only start actually using these dividends to fund their lifestyle, either when they're in retirement or whenever they may need them dividend payments for. So that pretty much sums up the dividend investment strategy. I'll also give my 2 favorite dividend paying stocks right now that I think would be great in anyone's portfolio. Please do remember, I'm not a financial advisor though, and these are just some stocks in my opinion that I really do like. So make sure you do your own research. So the first stock here is of course Apple, AAPL. This company doesn't pay a big dividend yield, but it is a nice mix of a growth stock and a dividend stock as well. Apple, of course, is a household name and is always coming out with new products. While the iterations may not be exactly revolutionary each time, for example, from each iPhone to each iPhone, they do have a very loyal fan base who are always buying their products. Combine that with the rumors of Apple getting into the electric vehicle space as well, I think this is still a very exciting stock going forward into the future. This is something that I hold myself, and it's nice to be able to have a stock with good growth potential that also pays a dividend. Next up, we have 3M, ticker symbol MMM. And this is one of them stocks that I was referring to earlier as a dividend aristocrat. Not only have they paid consistent dividends for the past 59 years, they also have a very attractive dividend yield of 3.33%. Now, I'm sure whether you know it or not, you probably have one of their products lying around your house somewhere. They make pretty much everything from face masks to double-sided sticky tape, any kind of industrial stuff. They make everything. So for this stock, I wouldn't expect to see any major growth in terms of their actual stock price. I'd expect probably to stay around a consistent level, maybe with some growth. But the main attractiveness here on this stock is the dividend yield of 3.33%, which is very, very good. So guys, they are 2 potential stocks that you should consider for your dividend investment strategies. That pretty much sums up the dividend investment strategy. As I said, as part of this series, I'll go over some other investment strategies as well. So if that sounds good, make sure you do subscribe to the channel. And if you could take a quick second to drop a like on this video, that'd be very much appreciated. Let me know your thoughts in the comment section below, or any big dividend stocks that you guys are a fan of or that have in your portfolios. And I'll catch you guys in the next video.